Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, August 21st, 2026. Ron Quaranta here with my co-hosts David Brill and Joshua Clayman. Before we begin, for everyone watching us on YouTube and LinkedIn and X, thank you so much for tuning in. Our usual disclaimers, obviously, nothing we're discussing is any sort of investment or legal advice, and really the things we talk about are our own personal opinions, not necessarily the opinions of our firms. If you have questions for the three of us, please put them in the chat. We will address them as soon as possible. David, I'm looking at the terminal even more than usual on this Friday, and you and I have been texting about all the notes we've been taking. David, kick us off. Tell everyone what's happening.
Well, Ron, if you look at the terminal anymore, you might need reading glasses.
Getting a neck ache.
What's going on? What a week. Let me tell you what happened in the last 72 hours alone. Tuesday, the SEC proposed regulation crypto assets, the first formal crypto rulemaking in the agency's history. Wednesday, Secretary Bessent doubled the Treasury bond buyback program and Bitcoin surged 8% to nearly 70K. Wednesday evening, Trump hosted CEOs at the White House to discuss the end of the war on crypto and declared an end of the war on crypto. Thursday, the CFTC held its inaugural, and this is a tongue twister, Innovation Advisory Committee meeting on crypto, AI, and prediction markets. And we go live at this morning, and Bitcoin's over 77,000, its highest level since early June, up almost 20% in 4 days. Who said buy in May and go away? Right now, the industry's biggest question last week was who gets the clarity first. This week, the answer is everyone moved at once. Whether the moves are permanent or procedural is what today's show is about.
Josh, I know you were out in Wyoming, so welcome back. Wanted to hear how SALT went. I know it's a big conference, and hopefully you shout out to our friend David Pope. Hopefully you got to see David.
So I didn't see David, but I'm sure he was there. I was running around a whole bunch. What I would say is SALT was fantastic. It was quite busy. It was beautiful. I mean, Jackson Hole is just beautiful. I learned a ton. A lot of stuff was focused on, things were focused on all kinds of different topics in our space, but also like I moderated a panel that dealt with future-proofing banking, so tokenizing, what was it? Digital banking and quantum cybersecurity. I forgot the title of it, which was really interesting. And then there were panels on agentic AI and crypto. So it was pretty broad. There also were little smaller roundtable sessions, like closed sessions. So I went to one with the comptroller, so Gould. Yeah, so it was. I think it was great. It was wonderful to hear Senator Lummis and Tim Scott speaking, about, what's coming, what's going. But yeah, I mean, I think while we were there, that's when the reg dropped.
I've got to point out one thing, David. Whenever Josh is out at a conference speaking, there generally seems to be a spike in crypto prices. Have you noticed this?
You know what? I hadn't, but now we'll have to see what the correlation is.
Isn't there a similar one when David leaves New York or visits New York or something like that, or Florida?
That's usually related to weather.
Okay, that's true.
It's usually weather. David leaves and the skies open up and we get 17 inches of rain generally. David, Josh, there's a lot to unpack here. David, I'd love to go into the data set specifically. Pardon me. When we look at 77 on BTC, Ethereum up 27% this week so far. BTC, I think cost basis for a lot of holders publicly reported, David, are now positive on a cost basis. I think we've broken above the 200-day moving average. In an ordinary world, David, those are usually bull signals, and I don't want to overstate what the price moves is. But is that a bull signal in your mind, or are you waiting for other data points?
No, look, I think it's a bullish signal, but I really think that we need to talk about the almost $4 billion in liquidations that really drove the market higher and at such a rapid pace. So what I would say is, and look, we've been talking on our show about really people should we're not giving investment advice, but people are interested in crypto and acquiring it to dollar cost average. And we talked about dollar cost averaging in the 60s, and still like we're going to have, movements up. We'll have some movements back. We'll retrace some. But if people do want to get in the market, it's really great to dollar cost average. Don't go all in on a spike. Really just be methodical about it. But going on to your point, so I think it was really the 4 billion in liquidations was a big catalyst. And then there's this idea, and I want to talk about it a little bit if we can.
Please.
Why Secretary Bessent's comments were so important. So I'm going to just explain what a buyback, a treasury buyback is, so people understand.
We're going to get a treasury lesson. Josh, I don't know about you, but I've been waiting for this from David for months.
So I am, but can I just for 1 second just pause?
Go for it.
Can we please go back to the liquidations later? Because you were going to say like how that affected everything. So I just want to make sure we loop back to that. So maybe we sit our minds.
We will.
And now on to the treasuries, please.
All right. So
tell us how the treasury market works, David.
Okay, so I'm going to put my Professor Brill on hat for a minute. So basically, on the 19th, Secretary Bessent announced that the Treasury Department would at least double the size of its long end liquidity support buyback operations, raising the per operation maximum from $2 billion to at least $4 billion for securities in the 10 to 20 and 20 to 30 year maturity sectors. So what a treasury buyback is when the U.S. Department of Treasury repurchases its own previously issued bonds from primary dealers. The program targets older, liquid off-the-run securities and is funded by issuing new debt, typically shorter dated paper. So total government debt doesn't change. The effect is to compress the long-term years and inject liquidity into the bond market. So liquidity is the thing that makes risk assets and other assets on the risk curve really go up and get positive momentum. So what happened is the buyback expansion signal that Treasury is willing to actively manage bond market stress.
David, I'm going to interrupt you for 1 second, buddy. It seems like Josh, unless it's me, do you hear that echo on David's side?
I hear it too, but it
we
wasn't
got
going before.
Okay, well, why don't I pause for a minute and we'll figure this out, and go ahead, Ron.
Yeah, no, David, I appreciate it. And Josh, we will definitely come back to the liquidations. David, I'm going to add my perspective on this because the financial market responded in some interesting ways. And Josh, you saw this as well when the Treasury Secretary says the government's going to buy back billions in bonds, are going to double their buying rate. That to me is a pretty clear signal that they're not happy where interest rates are. And that's meant to pull down rates. Now, we can have very long conversations, and people in the audience, if you've got opinions on the Treasury Secretary or on their Treasury market actions, the Treasury markets, the fixed income markets broadly, Josh, really pushed back the next day and said, don't think it's a big deal, and yields and rates started moving back up. Look, there's a political component to making sure interest rates come down, David, particularly in an election year. But it does lead to the idea that the government, the Treasury Department, will do more. They've got a lot of tools in the toolbox to bring interest rate down. So I first looked at Bitcoin's price. I'm like, wow, that's a pretty knee-jerk response to potentially lower interest rates in the future. Then it kept going. And I'm like, well, there seems to be some momentum here. And David, you and I talked about it. Crypto ETF flows up big. I mentioned a bit earlier, we're above the 200-day moving average, which is usually a bullish signal. David, tell me if you agree with that kind of hypothesis, or do we need intervention more and more to make crypto appealing?
Well, look, I think we talked about how prediction markets and equities had sort of stolen the thunder. I'm a little tongue-tied today. Sort of stolen the thunder from the liquidity in the crypto markets, especially prediction markets, and to a lesser extent, equities broadly. So I think one of the things you really have to think about is like a core tenet for risk assets is that, when rates go down, the opportunity costs go down, and then people are more willing to put institutional money moves towards riskier assets. So I think that is at the core what you're seeing. And it's ironic enough because it's actually going on while there's a lot of crypto, both news and announcements from both the SEC, CFTC, and the executive branch. But I still think this would have happened even if those announcements weren't taking place, because this is really a structural financial issue.
Wait a minute. Go ahead, Josh.
So I was just going to say, as we're talking about treasuries and interest rates, I mean, there also was like a big, I don't know if it's a correlation just in time or if it, but there was a lot going on X and otherwise about the total debt that the country has.
Ah,
And so, what are your thoughts about that and what, if any, interplay there is? Because people were saying, oh, yields on treasuries haven't been this high in so long, and so,
yeah.
there's one giveth, one taketh away, right? So, would love to hear your thoughts on that.
David, I'll weigh in real quickly. I feel like a lot of the public commentary about what Secretary Bessent said, Josh, and the subsequent very quick news that we hit $40 trillion in debt, which is about slightly over 100% of GDP. We're conflating two particular items because 2 billion or 4 billion in treasury buying isn't going to make a dent at all in $40 trillion in treasuries. Now, we can have very long conversations about is 100% GDP debt to GDP ratio good? Answer is no. I'm sure David will agree with that as well. I get the sense there was this impulse reaction that interest rates are going to come down, which means sort of risk on, and that momentum built. And I think that got multiplied with, or was a catalyst with, SEC's announcements. And I really think the CFTC announcement, Chairman Selig, David and Josh came out swinging, talking about, creating regulation that aids the crypto market. So I think it was that confluence, Josh, of all of that. I think the $40 trillion commentary, I agree with it, but is a separate, bigger issue. David, educate me. Tell me I'm wrong.
You're wrong.
Educate me too.
You're wrong, Ron. I actually think it was the $40 trillion number, but I really think it was the willingness of Treasury to manage long yields and the willingness to tamper them down that led to the short squeeze that occurred. Because the market was so heavily shorted that you saw a couple of $1,000 move created this cascade of liquidations. So I'm gonna, like, if you think about it, high yield, like high rates, has been the primary headwind for crypto this year. And so I think that those two factors, the amount of debt and I think the willingness to act, look, it's something we talked about. We all said we didn't think we'd see a rate increase before the election. And we thought that the executive branch and Treasury were going to work on keeping rates lower before the election. So these are all things we talked about. It's just Secretary Bessent just came out forward and was very direct about what his intentions are.
Josh, I'm going to need you to referee because I'm going to disagree with David a little bit.
Oh, wow.
And this rarely happens. David, I don't necessarily disagree with you per se, but I don't think it's been interest rates, again, in the aggregate that's kept crypto down. I think it's the rotation trade because they got higher returns somewhere else. I think the retail buyers who were looking at crypto 2, 3, 4 years ago and making double-digit returns quarter over quarter looked at prediction markets and thought, well, this is fun. I can bet the crap out of this and sometimes make money. Most of them don't, but that's not the perception. I don't think it was just the interest rates, David. I think it was the rotation, or buy the hyperscalers, sit back and watch them have double-digit returns.
So
tell me I'm wrong.
No, I don't disagree with you, but I think what's moving the market is institutional money, not retail money. And
the crypto market.
In the crypto market, I think that the majority of this money coming in was institutional. And I think it was the rate sensitivity and like knowing that there's going to be help in keeping rates down that brought some of that money in. And I still think that the market was just overall really short. So I think these confluence of events just led to this big, liquidation that occurred and shorts being liquidated.
I mean, oh, sorry. Not so in the middle of you guys, but
I was going to add one other thing.
Sure.
We are coming up to the end of the 4-year cycle, and whatever people think about it, October is the end of the 4-year cycle. And I think a lot of people thought people would front run the end of the 4-year cycle. So maybe this confluence of events gave people a sign that maybe, the 4-year cycle is coming to an end and we're just going to front run it in this rally.
Fair point. Josh, go ahead.
So now my mind has been wiped by that last comment. I know what I was going to say. It's interesting to me because we point to all these different factors, but then it seems like when there are big price moves, to your point about people being squeezed out and forced liquidations, it's been working both ways, right? So when the price drops and then people get forced liquidations, then the price really drops. And when I do wonder. Yeah, I do wonder how much we're attributing to factors that maybe triggers in some way, but that people have certain numbers in mind, and if it goes up one way, it's gonna shoot down, and if it goes the other way, it shoots up, and maybe that, yeah, I'm not sure how much of it is the external events. I guess that gets it going, but it seems like it's almost like once it gets going, it, as you said, it accelerates both ways.
Yeah, and I think you can see how that's reflected to your point. I mean, David, I haven't looked, so forgive me, and I'm not sure if you've kept up, but have the option chains shifted for BTC or ETH or the others? Meaning, if you get those cascading sales that are covers, you'll see a readjustment in the forward options prices, correct?
You should.
Right.
Although it may be taking some people time to like cover and reestablish their positions after getting liquidated. But Josh makes a really good point.
Right.
Yeah. But Josh makes a really good point. Look, on 10/10 last year, we saw massive liquidations to the downside. So now we're seeing, liquidations to the upside. The reason why I'm discounting regulation as driving this upswing is that Bitcoin doesn't need regulation to move its price. Well, with the institutions, and why we need it in this country is really for all the other coins and for tokenization and all of those things. I think Bitcoin has its regulatory place, and so I think it's not as driven as much by regulatory movements as the other Ethereum and some of the other coins would be.
Josh, I feel like David wants to say alts.
I was going to say alts. I actually was going to say that. I was going to say, guys, like beyond Ethereum, which I don't really consider an alt.
Yeah.
How are they doing? Have they received a pop? I mean, if we get reg crypto assets, right, with some kind of clarity for when an investment contract ceases to exist, I mean, did that show a pop in the alts? Or is that something where right now we're still waiting? Again, not investment advice, and you never want investment advice from me.
No, the family office handles that for Josh. I mean, the pump token's up 45%, David. So, to us, it's what's the use case that makes sense. I was pleasantly surprised, again, not advocating. XRP's up 40%.
Yeah.
In 7 days.
Wow.
I mean, look, I think you see big movements in Bitcoin and Ethereum, and then you're going to see people move money to the alts too. I mean, look, there's some meme coins that I follow that I will not say on air, just really as a basis to like look at the meme area. Is another part of the altcoins, and a couple of them I follow, some have almost doubled in the last week.
Yep.
And so, look, obviously there gets to be some excitement and some FOMO here, but I think that this has helped. Like, look, cheaper money and more risk on is really good for crypto. So, I think this is beneficial to the market. But I do want to go back to what you and Josh were talking about with Commissioner Seelig and the shots fired announcement that he made the other day.
He is not messing around.
Yeah. I think I was talking to somebody that both of you know very well, who's very involved in DC and is based down there. And, I was saying to him that I really thought that what you're seeing now, especially with the SEC and the CFTC coming out with their pronouncements, and I said this before Seelig came out with his, is that I think this is really putting pressures on the Democrats to come to a deal on clarity. Because I think what will happen now is either if clarity doesn't get approved, you get Republican appointees who are going to be determining the movement of what rules look like going forward in the SEC and the CFTC. So
Yeah.
in some ways, if the Democrats don't coalesce around clarity and help pass it, it's really going to be a Republican-led administration that will put these rules forward.
Yeah. I mean, in the long term, though, the concern ultimately is always, do we get another administration who is reg by enforcement and tears it all down? Arguably, it's a much bigger edifice to tear down than it was 2-3 years ago, given how pervasive it is. I want to segue for 1 second, Josh, because I realized trying to understand how David thinks, Bitcoin is alpha for the crypto market for you. All of the alts, you chase alts for, not you, people chase alts for the beta, essentially.
Yeah.
Interesting.
Yeah. But I want to know, Josh, what do you think? Do you think that with Selig and, really putting down the mantle and sort of calling out the other side, how do you view that statement and how it might impact clarity?
I mean, he really called out the Democrats, right? I think, listen, we've talked before about how in some ways it may be better for certain of the agencies, at least for the short term, to move forward with their own rules and regulations, or proposed ones at least, and guidance without clarity. I do think, as we've been hearing and as we've discussed, more and more people, or maybe not more and more, some people have been pushing for the inclusion of prediction markets in clarity, right? Including some of the tribes and folks like that, as I understand it. I don't have firsthand knowledge of this, so it could be wrong. All caveats apply. And so, if clarity doesn't pass, that language doesn't get in there anyway, and then that potentially gives freer reign, not just for crypto, but for prediction markets and for the CFTC to continue interpreting things as it wishes. So I don't know. That's some thoughts for me.
As a lay person to how politics in DC works, I would have thought prediction markets deserved its own legislation. But am I wrong to think that, Josh?
So that's what I think too. I think many people believe that too. I mean, it just feels like too much trying to fit too much new stuff into a law or a bill where so much work has gone into trying to craft compromises, some of which it seems like people are trying to reconfigure, including about yield. So to me, I think it would be better pushed, right?
Yes.
However, some people are saying, listen, if we're amending the CEA, we should amend it in ways to address some of the more recent updates.
And I'll take a slightly more cynical approach to that. And I'm with you, Josh. I agree. But, David's heard the cynical in me where we've seen whatever party is in power, it doesn't matter. Whatever's moving through Congress, they will add any kind of riders or amendments or just jam stuff in, ultimately, in some instances, with the goal of making sure it doesn't get passed. It's not about the legislation. It's about the tool to stop the legislation.
I will say this. I think for the industry, it would be much more beneficial to have a version of clarity pass, to have it be bipartisan, and to have something that will be longer standing and not, potentially undone by another administration. So I want to be clear, I know I've made some strong comments based on what Commissioner Selig said, but that is the preference. And I think that's what the majority of the industry is looking for. But, I think this is a leverage point that's being played by the commissioners, and I think it'll be really interesting what happens in the next few weeks.
Josh, can I ask a question? You mentioned CEA, and I feel like we give it short shrift in these conversations. We don't talk about it enough. And we don't have specifics yet, but in your mind, how much can the CFTC do to accommodate the industry based on what Commissioner Selig's talking about? I kind of get it conceptually, what is a commodity in the space or how that gets structured, but how does that help the industry? Do you have any thought about that?
About how changes to the Commodity Exchange Act would...
Sorry, about how whatever CFTC would put forward as regulation in the absence of clarity would benefit the industry.
I mean, well, first, I don't know fully what they were planning to put forward, right? But I mean, part of the whole point of clarity is to say, look, some of these things, some of these digital assets, they are, well, I guess actually what I was going to say actually was something that Genius did, which was to say that stable coins are not within the purview of the CEA or the Securities Act or the other federal securities laws. I mean, I think giving the CFTC an ability to have greater oversight over the spot market and various other things, I think that's stuff that needs to be spelled out a bit. I mean, the CFTC already has obviously anti-fraud and anti-manipulation authority over the spot market. But yeah, I mean, I'd love to hear your views, guys, because I think, interestingly, I think the CFTC, as we all know, has so much on its plate right now.
Yeah, true.
And I think, actually, if they're to create their own rules, I would imagine that they have a lot more flexibility in terms of in what order they pursue things and with what resources.
Yeah, it's interesting because to me it was, again, not a lawyer, so a lot of this is we've seen what regulation crypto assets is from SEC. It's 400 pages. We will be reviewing it. Full disclosure, we will be submitting commentary. Josh, I've basically stolen David to make sure he contributes commentary to it as well. To me, whatever comes out of CFTC will be a puzzle piece that adds to what's been put forward as regulation crypto asset.
Yeah, I do wonder because there is, I mean, some of what the CFTC has done now has kind of grown out of work that Chris Perkins and others who,
Yep.
Were part of the GMAC Digital Assets Subcommittee and the various working groups, some of what has been done, including, how do you define what this, whether you call it an ancillary asset or whatever the digital asset is, right? How do you define something that is a commodity and not also a security? So I do think there's a lot of work that can be done in the absence, and I guess working hand in hand with the CFTC.
David, weigh in, buddy.
Well, for one thing, I think we should give a shout out to our friend Lewis Cohen at Cahill, who's played an important part in some of the
yes. Shout out to Lewis. Well done.
And really appreciate his hard work and efforts to move this forward. But what I think was interesting with the reg crypto assets is I think for the first time the SEC is really coming out and saying that the existing rules built in the 33 Act really are not a great fit for crypto. And it's not a great fit for a digital ecosystem that is handling trillions in transactions. So I think this is really, from that perspective, this is really a big step forward. Instead of just being tethered to Howey and tethered to the 33 Act as it's currently formulated, and really considering new rules for this asset class. So I think that in and of itself is a major deal. I think adding a practical capital framework is really important. I don't think we're going to see a rehash of all the ICOs that we saw in the past, but we have this 5-part structure that the SEC has proposed, and I think that's really important too. Thinking about capital raising and having a safe harbor, and these things really to support this industry in a way that it can grow, because we all know that raising money towards a venture is very difficult. And so creating this infrastructure, and I think the most consequential part is the investment, contract safe harbor. So, there's a documented path for a crypto project to demonstrate, functional decentralization. And there's a form you file with the SEC to formally be deemed no longer a security, and what that means and how it can be traded. And so I really think that there's a lot going on there that's really very impactful. And so I think this is a really important step forward.
David, fully agree with you. And I do want to take one step back. And Josh, I missed your note, but we'll talk about it. I don't want to minimize that. I've had this comment, David, Josh, in several conversations I've had over the past couple of weeks. I'm not minimizing the effort associated with what's been created or proposed, rather, in Clarity. I mean, we're still looking at proposed regulations for the Genius Act. So I get that these are complicated conversations. And for everyone in the audience, I don't mean to sound flippant when I say just past clarity. I get it. There's a lot of work involved there. But Josh, did you want to weigh in?
I was just going to say, like, some of the things that that I saw in the reg crypto assets, such as, for example, having to show that you are satisfying the essential managerial efforts that you promised when capital raising. Just a shout out to our friends at Web3 Foundation and Polkadot, because that is a lot of what was done in connection with their 3-year engagement with the SEC. With the prior parade of something.
Josh, I'm just glad I haven't said these words sufficiently decentralized, and I probably don't think I'll need to think about that too much. We've at least got guideposts around what that would or wouldn't look like. I thought, and I only read the executive briefing, David and Josh, so forgive me. I thought it was fairly generous terms, David, to the point that you made about raising. I think it's, correct me if I'm wrong, I'm sure I'm screwing this up, $1 million over a year or 4 years and 75 million. I mean, there's some pretty significant accommodations for firms that are looking to innovate in the space, no?
Yeah, subpart B is the startup exemption, and it's up to 5 million raised over 4 years without full SEC registration. And then a principles-based, I'm really tongue-tied today, principles-based narrative disclosures are required. And then no audited financials, and it's designed for the earliest stage of the crypto project. And then there's a subpart C, which is akin to Reg A style framework, and that has 2 tiers: one at 20 million with lighter disclosure, and up to 75 million with audited financials and ongoing reporting. But blue sky laws would be preempted. So it's really giving 2 paths for new projects to grow. And I think also, look, a $5 million cap over 4 years really prevents, a whole cohort of retail sort of losing their shirts. So it's giving retail a chance to be involved, but it's also capping it so it's not a consequential amount of money.
Yeah, David, we've got an international audience, so I'm just going to ask, for those who may not know, blue sky laws. Please tell them.
Those are state securities laws, and so obviously we have 50 states, and each one has their blue sky laws. So this is very helpful to have the state laws preempted, so you only have to deal with a federal construct and not with all 50 states.
David, Josh, when we hear these exemptions, which I think are really good for innovation, which are really good, Josh, you've said it for years, we all 3 of us have, builders keep building. I read the executive summary and I thought, holy cow, Josh is going to be really busy in the next 3 to 6 months. How's that panning out, Josh?
I mean, listen, I think we're all busy right now. I think that's something really awesome with crypto specifically, and then with all of the adjacent pieces that are touching crypto, and then with the whole quantum conversation, and how we're going to migrate users and things like that. So I think a lot is going on. What I would say is something really, the way I'm framing in my mind regulation crypto assets is, the SEC had pushed people towards using Reg A, right? Reg A plus, and that people said, that doesn't really work for crypto. And we did see folks like, who was it? I can't think of the name. I can picture the people, but who they did a Reg A, and then they later said that, they no longer had a security. Who am I?
Stacks. I think it was Stacks.
Yeah.
Right. Yeah. Okay.
And what this one part of this new exemption mirrors Reg A in a way, but it makes it crypto specific. And so I think that's one of the big things, is taking things that are similar to existing exemptions, and rather than trying to shoehorn crypto in a way that doesn't fit, really creating something that is fit for purpose specifically for crypto and fundraising in crypto, while still trying to track to some more familiar features.
Josh, for a dummy like me, just reiterate what Reg A is for people who may not know.
Well, that's sort of in my mind. I think about it as, well, if you're not doing an IPO, right?
Yes.
So you're not going to have a public offering. It's below that, and it is above, in my mind, not a qualitative thing, but just in terms of level of intensity of information that you need. Above, say, like Reg D, right, where you don't need really to have interaction with the SEC, although typically you'd file a Form D,
Yeah.
right, or something like that. With Reg A plus, you would need to be qualified. You need to have that offering qualified by the SEC, and there's two different tiers, right? I won't go into the details, but with the tier that allows you to raise more money, you have to have audited financial statements.
Right.
And so there's different, it's kind of like ratcheting up or down in terms of interaction with the SEC. But one of the things with Reg A is, unlike Reg D, you can have retail purchasers purchase.
Yeah.
So
these are ratchets of firms looking to raise money, and the top of that ratchet is you're going IPO and all of the reporting requirements and cost associated with that.
Yes, exactly. And also it's talking about like who can touch this, right? So
Right.
with Reg D, that's pretty simple, but you're limited in your universe of people whom you can sell to.
Right. And we're talking about qualified investors, high net worths versus retail everyday people. I mean, David Brill Industries, that's just going straight IPO, I'm assuming, right? I mean, it doesn't need Reg A or Reg D. Come on.
We've just been getting such high private valuations. Why go?
Oh my God. Yeah,
No, I'm just kidding. But look, all joking aside, a lot of companies have stayed private. Look, and have raised Series C, D. I think I even saw somebody raise a G round. So, look.
Why do a G round though, David? I'm sorry to interrupt, but when I see organizations doing G rounds, why?
Let's not forget how onerous it is to be a public company.
Yeah.
You have audited financials, you give quarterly reports, everything you put. I mean, I've spent hours, and I'm sure Josh has, drafting proxy statements, drafting quarterly or annual statements, and every word is scrutinized. So I think companies, if they can raise private capital, not have to deal with the public markets and all the scrutiny they get, it's a way to grow your company and continue to get it growing, growing it, funding it, and a higher valuation.
So I'm totally going to pivot on that because you said private markets, David, and I've got to ask, and I'm fascinated by the topic, and Josh, I'd love your perspectives as well. Not crypto related, but you can envision crypto companies going down this route, and some of them have. Retail access to private markets seems to be an important part of the economic conversation, David. Is that a good thing?
So it really depends on fundamentally what your economic view is fundamentally. If
The investors.
Yeah, for the retail investor. If you think it's every investor should have access to everything and it's their choice to be knowledgeable about it and have access to it, and they own responsibility for their actions, that some people will say that's great, that's what we want. Some people feel that the government needs to be sort of the big sibling to investors and, really needs their, overall protection, and maybe retail shouldn't be involved in these complicated things. They have the ability to get taken advantage of. So it really depends where you fall on your view of the economic system and how retail investors should have access to products.
Josh, did you notice he almost said Big Brother? He was very circumspect. He's very controlled.
Yes. Well, look, it's important. I was almost going to say like a paternalistic view, but I didn't want to say that. So I went to a big sibling approach.
Well said, David. Josh, I mean, obviously, Clayman Family Office has a significant proportion of private shares. I would love your opinion about the private markets. I'm kidding. I have no idea. We're not talking about investment advice, folks.
I mean, I would just say, stepping aside from that comment,
she's totally ignoring it.
I would just say that, friends of ours have worked pretty hard, and you guys may have as well too, at getting folks to think broadly about who should be considered eligible for Reg D, right? And what kind. In fact, I feel like when we went to Washington, Ron, didn't you raise that?
I did.
Yeah.
I got some, stink-eye glances from a couple of people, but otherwise, it was a good conversation.
Yeah, I mean, I do think, and I'm trying to think, for some reason, apologies for those at home, my grasp of names today is not what it normally is, but we do have a friend who's brought a number of cases about this, about
You have a
expanding the
lot of friends. You got to
definition
narrow that
of
down for me.
accredited investors. No, but you guys know who it is. I think he used to be at Paul Hastings. Anyway,
Our
maybe
Chicago
he still
friend?
is.
Our Chicago friend?
I don't know where he is.
We'll talk about it in the virtual green room. I think I know who you're talking about, but
Sounds good. I'll try and Google and refresh my recollection. And apologies to him.
Look, I think the important thing is, I think we all agree we want retail investors to have more access to things. It's just calibrating what that access is and still having some protections for them.
Yeah.
You don't want people excluded from the financial markets and the opportunities, that buying like private shares and SpaceX or Anthropic could provide people, but it's just finding a mechanism so that they're also protected.
And you saw the challenges of that, David. You brought up, when we look at SpaceX, for example, a few months ago, organizations were offering buy SPVs that hold shares of SpaceX. And sadly, some of them didn't hold shares of SpaceX. Or, fraud is fraud. We've always said that. But you need to know what you're investing in and what you're getting involved in, which is critically important. David, Josh, we've got a few moments. Go ahead, Josh. I'm sorry.
Nick Morgan.
Nick Morgan. Yes.
Shout out to Nick.
Shout out to Nick and his work at ICANN. Very important work.
Exactly.
He does very, very good work. Find out about Nick. Look him up. He's worth chatting with. David, Josh, I wanted to, we spend a lot of time talking about stuff stateside, and that's important. And certainly a good chunk of the membership is stateside, but we do have colleagues and members overseas, and I get the privilege of having conversations with them fairly regularly. So I spoke this morning with some colleagues in London, good friends who I worked with 100 years ago, David, back in the Thomson Reuters days, and they're deeply involved in crypto, and they're deeply involved in on-chain finance and a lot of different things. And I have an interesting commentary that they shared today, which was, nothing's happening overseas because everyone overseas is waiting to see what happens in the United States. He said, as soon as Genius passed, as soon as Clarity potentially became a thing, especially as soon as SEC put forward regulation crypto assets, he said, like, the air just came out of their room overseas. A lot of what they're focusing on is, we've got to get to the States. The States are where the investments are going to happen. The States are going to be where the buying is happening. And again, I'm not mocking any other markets. There's a European market. There's a lot of work. Josh, you and I have spoken about this in Asia, but it was fascinating to me how important what's happening in the States weighs on the global perspectives for crypto. Are you seeing the same thing, David?
I'm going to push back a little bit, Ron. I mean, in the EU has
This
MiCA.
How's it spicy today?
I mean, Europe has MiCA. Like, we've seen other countries that have put regulations in place.
Yes.
I would say that other countries want to unlock the resources and the capital in the US, but they haven't waited for us, for our legislative process to go forward with their regulation. What I do think they may do is maybe in the second iteration of some of their regulations, they look to what we do here in the US and like mimic it or, take the best parts of it. But I do think that they move forward. We're actually behind.
No, I agree with you. We are still, relatively speaking, behind, David. I'm just talking about from the perspective of, if you had to do a crypto asset allocation and you were located in Europe and you have a global remit, you're probably looking at allocating to the States once some of this stuff starts moving forward.
Yeah, I mean, ideally, you want the capital in the States and you want the access. But Josh does a lot of international work. What do you think?
What do I think? You mean, which one of you am I going to agree with? I think.
You know what? I would be.
I'm not taking that bet. I'm not doing that today.
Ooh.
No,
it's a tough crowd today.
Did I see? Not to take this in a weird direction, but did I see somewhere on the internet that Russia came out with a rule on stable coins?
Yeah.
Yeah, last week we talked about it. Yeah.
Oh, I'm sorry, I wasn't there.
That's okay. But,
But
as far as appealing markets, all due respect to, my many Russian friends,
yeah, I'm not saying Russia is appealing.
I mean, I'm not going to
Yeah.
allocate investment in Russia right now. Not investment
Agreed.
advice.
Agreed.
But at least give them credit. They came up with a regime. They want to have
Agreed.
people have access to it, and they come up with a regime.
Yep. Fully agree.
I'm even though like I think the poly market and Kalshi are around 18% right now for clarity approval, maybe 20%. I mean, we have made a lot of progress, and I think what's really good is that we really have a runway now. We're either going to get clarity passed, or we're going to get rulemaking from the SEC or the CFTC. So,
Yep.
I think we have made a lot of progress, and we have Genius into law, and then the rules for Genius are being drafted, whether it be by Treasury or the other departments. So, I really do think we've made progress. I think it's just which way is it going to go? Are we going to get clarity passed, or are we going to we're going to get rulemaking going forward from the SEC and the CFTC?
Yeah. And David, I do want to do a shout out. I don't know if he's watching, but to our resident policy expert and WSBA member, Adam Goldberg. David, you chaired our crypto asset working group yesterday. Feels like it was a week ago. It was only yesterday. And we were talking about Clarity Act, and he, I think, correctly noted the September 15th deadline is the cloture vote to bring it forward for a vote on the Senate floor. If it doesn't make the cloture vote, his perspective, David, was, and correct me if I'm wrong, was that it's dead. It's just not going to happen because we're in election season. There might be a change in who holds the House, who holds the Senate. So Clarity's last chance is September 15th.
Yes, and Adam's right about that. And I do think it is really important that the cloture vote gets passed and that representatives, that senators go on the record whether they support clarity or not.
Yep.
Now, we know for a whole host of political reasons why people may not want that, and it may not happen.
True.
But I do think, and I know it's not always for the benefit of the American public, but I do think for our industry, we really should get clarity on who's for it and who's not, and know and have that knowledge going forward.
David, Josh, we're almost at time. I'm hoping with your collective permission to introduce a new feature that I want to throw out there for the three of us to discuss. And honestly, this one's not particularly crypto related this time, but David, trade of the month. Let's wait for it. Obviously, not investment advice, but I want to throw something out here. I witnessed what I believe is the trade of potentially the year. There was a small hedge fund that ended up managing quite a bit, which its name I can't remember right now. Leopold, who runs that situational awareness hedge fund, had some problems.
Yeah.
Lots of calls on their shareholdings, and one of the largest firms in the world, Citadel, came in at a deep discount and basically bought their equity, their holdings, David, sort of as a rescue play. I saw the news this morning, I believe it was the Journal reported that Citadel sold most of them. That is a flip for the ages, David.
I think that was a $15 billion flip for the ages, I think was being recorded. That is the trade of the month. And the unfortunate thing is, situational awareness's positions were directionally right. I think there wouldn't be an issue with the positions they took. It's just the way they just levered up so much. And this is really why, you can have great ideas, but you really need professionals. You need a risk management professional, and you need somebody who really can understand what your exposure is, so that if there are turns in the market, that you're prepared for that, and you have enough cushion for it.
They were directionally correct, but they were highly over leveraged for the positions that they held, in my mind, David.
Yeah, absolutely. But Josh, I know the trade of the month.
Trade of the month, and it will never be mine, clearly. Josh, we're going to end with you because we're coming up on a hard stop. I know you wanted to raise one more thing. Go for it.
Oh, so interesting. One thing that I overheard this week was just a discussion about the OCC and the Fed, and how the OCC, can do so much, right? And is doing so much. But because so many banks have bank holding companies, and the Fed has oversight over the bank holding companies, that some of what the OCC can do until the Fed acts in concert or in its own way, it can kind of be, I don't know, undone or made less effective. And I thought it was an interesting way of putting it. Maybe that's obvious to you guys and also obvious to those at home. But it is very interesting to think about the fact that the OCC may have its final rules under Genius before the Fed has its proposed rules.
Yeah.
So it's just very interesting, given, as you guys have talked about, the difference between the Fed and the other agencies.
Yeah, we'll definitely have to dive into it. I just want to leave off there. Pauline, thank you for watching. Thank you for this seminar. We're a seminar now, David. David Brill is a legal expert on all crypto matters. I'm always happy to see him present online. I'm happy that Josh and I are supporting Cast for you, David.
I am too. I'm very happy to be supporting Cast to David.
Absolutely. Everyone, thank you so much for tuning in. We've got to leave it there. If you've got additional questions for David or Josh or I, please email us info@wsba.co. Have a great weekend. We will be back next week. Take care. Bye-bye.